All right, guys, welcome back to the channel. Bitcoin's finally hit $70,000 for the first time in 3 months. Exactly 90 days was the last time Bitcoin hit 70K. Now, a few other random facts. This is the 15th highest close in Bitcoin's history. We are less than 6% away from an all-time high. And we have data showing that masses are trying to short Bitcoin at this time. And I'm saying that this is the worst possible time to be shorting Bitcoin. More on that in today's video as we dive into all of the financial markets today. Plenty of updates coming your way. Make sure you hit that like button. It goes a long way to helping out the channel grow. And subscribe to the channel if you're new here. Each of the day's analysis continues to build upon the previous day. You're joining me, Jason Pizzino, as I said, covering Bitcoin, cryptos, the stock markets, and the real estate cycle. Bringing it all together, giving you that macro cycle analysis across all the markets. Okay, so over the last couple of years, I have come back to one major thing, the 18.6 year cycle. It continues to play out time and time again. On top of that, I've talked about two very major things now, and then a third thing, which I think is coming up post 2026, 2027. We have time on that. Obviously, those two things are the winner's curse, which we are in now, which means that basically everything is going up. I talked about this in 2022. I talked about it in 2020. The main thing is we just keep following the cycle and prices keep going up. That's an everything bubble, the way I'm looking at it. Real estate prices have been up. Stock markets have been up. Commodity prices, to a degree, have also been up. And of course, Bitcoin and cryptos. Now, the next thing that we're looking at when it comes to cycles, in this case, we're looking at the Dow Jones, is what happens next year, 2025. What have the cycles shown over the last 123 years? This is looking at years ending in this particular number. Say what you want about it, that's absolutely okay. If you found a way to have an edge on the market that showed the possibilities, the probabilities of what might come next and continues to work year after year after year, would you use it? Would you care where it came from? Some people would. I get it. They just want to stick to textbooks. But when you look at hedge funds, when you look at other people managing money, they time and time again underperform the stock markets. So with that said, what is the point of following their fundamental analysis? What is the point of following their fundamental reasoning from textbooks? It might be up to you. I might be saying throw the entire thing out. I could be wrong. What I'm looking at here is the cycle. This is what I've been following for many, many years now. And years ending in 5 typically have a pretty good run up. That's what we are focusing on for next year. Pretty strong moves. It seems like things are building towards that. It's not going to be easy. I dare say it's not going to be looking like this. Might be some wild swings within that year 5 as we layer it over the 18-year cycle, because we're getting into this end stage. So it all depends as you layer these cycles, because 2015 was different to 2005, okay? So that's why we continue to follow each of the cycles to understand where they relate. How does this all come together with the stock markets? How does it all come together with Bitcoin? Well, obviously my theory, hopefully if you've been following, is that if everything is going up, well, in the case of the stock market and real estate, more liquidity is coming into the market, more money's coming in, people, well, at least investors are feeling a little bit more greedy and they're a little bit easier going with their money and they want to start to make bigger and bigger returns. Some of that money is going to find its way into Bitcoin, and then some of that money is going to find its way into degenerate stuff. Meme coins, AI coins, real world asset coins, gaming coin, whatever you want it to be. That's going to get a little more difficult and trickier to identify in this cycle. Let's just focus on the macro stuff and then we'll move on to those pieces there. So easily said, this is where we are. That's been the view here now for a while, and basically it continues to play out time and time again. The next piece is shorter term. So let's just break it down into the S&P 500. You've seen this before, so I just want to update it. Day by day, this continues to work pretty damn well. It doesn't mean it has to be exactly like this, but we've seen this date here. That's the 22nd. Then you've got the 25th, and then you have this higher low on the 29th. So we're about a day out from that now. Obviously 29th here, 28th for the US. And basically each of these cycles suggests that it's up from here. I think we're going to see some sort of volatility into the election. I'm pretty sure most people would potentially expect that. Maybe we just pause from here, which some of the data suggests. But as you can see from the dates, we've got a hit on the 8th. So we're just looking at these lower points. See those dates there, 9th and 10th. So in this case, we've got the 8th. Then S&P ran up, then it pulled back, then it went up again, and it seems like it's having a pullback here. So if it does hit on the 29th, well, that's exactly this, right? It's following these cycles more so, the most recent 21 years, with a low on the 25th, a higher low on the 29th, and this solid line here. And well, if it continues like that, we're probably going to see higher prices into the end of the week, and then early next week before the election. And then maybe things get spicy, as they have done in previous election years, especially if there is an upset win. But the main thing I'm watching here is 5,800 points, see what happens from that. What would happen from here if that was to occur? Then possibly we would see some volatility with Bitcoin and cryptos as well, as they've been doing pretty damn well. Obviously, we know Bitcoin is or has hit 70,000 for the first time in 3 months, which is pretty significant. And a lot of people are trying to short into this, as I'll show you in just a moment. So just to get through some more of the analysis here, decliners in the S&P 500 had topped advances for 5 straight days. So there's a couple of narratives that come up when you dig a little bit deeper, and I guess what some of the media is trying to throw at you, at least the financial media, to continue to instill that fear, to suggest that the markets are going to fall. Some of the things that come up are these sort of breadth signals here. You've got more stocks declining than advancing, but what the data shows is that this is often a period of consolidation before further upside. So can you see how we're bringing this all together? We're obviously looking macro here. Things are still looking up. Next year, potentially up as well. There's going to be volatility, don't get me wrong, but look where those lows come in. If we're getting higher lows, then of course, winner's curse. And in terms of the monthly cycle, things are sort of looking up from this point. We have had a bit of a consolidation, and that's what this data is showing here. So the S&P 500, when it's within 1.5% of a high, it just says below high, okay? So 5 straight sessions with declining issues, meaning stocks outnumbering advancing issues. So basically, more than 250 are going down, less than 250 are going up. And typically when it's near an all-time high, or sorry, when it's near a high, that suggests consolidation within stocks, which typically you'd see a breakout after that. Is it tomorrow? Is it the next week? Is it 2 weeks from here? Let's have a look at the data. Well, it's not next week. It's not 2 weeks later. 1 month later, you got a 70% chance. 2 months later, 70% chance. 3 months, 60%. This is where it gets interesting. 6 and 12 months later, you're going to be in the positive 74% of the time, or 80% of the time. So 8 out of 10 times positive. And how much positive? Well, in terms of averages, 15.7% when you see this signal. You can see it all showing up. And this was a tricky time through the 1960s. So again, this data is going through nearly 70 years, actually, yeah, basically dead on 70 years of data points. And then again, in the dot-com boom, there was one here at the peak as the market was kicking off with the bull market again through 2013, as you can see from these signals there, 2013, 2017, 2020, and we have another one here now in 2024. So basically, things are looking pretty well up. And sure, as I've said many times, the short-term volatility, maybe the volatility lasts, or the downside lasts for a month, 2 months, 3 months, like we saw in mid of last year, July, August, September, into that low in October of 2023. But from that point, it just continued up from there. And it'll continue up until it doesn't. And I'm suggesting somewhere around these dates to start watching for more significant signs of corrections. I'm not saying that it peaks on January 1st, 2026, and then basically comes down. It could be a bit of a slow grind, some volatility, and then start to come down. And you'll start to see some sort of lows for the real estate and economic cycle around the end of the decade. Could be a higher low like we saw this time, could be the low. That's what we're looking out for towards the end of the cycle. So that's the data there. When we see these stocks, more stocks declining than advancing, it's basically shown pretty good results over the longer term, especially if you're looking 6 to 12 months out from there. Commodities up. I won't spend too long here. This is basically gold, not at new all-time highs, but it's basically been tracking around $2,700. I'm just putting out a couple of levels to the downside. Here's the major range so far in terms of the short term, 2,600 up to $27.70. The 50% level is at $2,700. So if it's unable to convincingly get through this top, that's the price for gold, then expect a bit of a pullback as it has done on each of the occasions on the way up. You're seeing some sort of pause or pullback as it continues to break to new all-time highs. Now I'm looking at gold here because it's coming up a lot more on people's radars, especially silver as well, as it broke out the other week, just last week, and has now pulled back. So people are talking about it. And they're also talking about the copper gold ratio, or at least the financial meter. So if you haven't heard of it, here it is in case you do, because what they do with this particular ratio is try to suggest that there is some economic anxiety and yet another reason why the market needs to collapse, why the economy is not looking so well. Okay, so copper has plunged to a multi-year low relative to gold, supposedly suggesting economic anxiety. Previous declines in this ratio were a poor predictor of declines in the S&P 500. So we're trying to find other reasons in the market why the market should go down, and then look at the data itself as opposed to just believing some headline, some ratio headline. Copper's down, which of course the economy is made up. There's a lot of things that are built using copper. Therefore, if it's down, people would be suggesting, well, they're not using it as much, not building as much, and things are looking weaker. Eventually, yes, but it doesn't seem like that at this point. So let's just cut to the chase and look at the data and the charts. This is the breakdown of the copper gold ratio. There it is. And that's where it came in the S&P. Boom, boom from that point. Another breakdown of the lows. You can see that the copper gold ratio is getting lower here, and then the market did take off. Yes, COVID, but then it took off again. So if you look at where that continued to climb, right around there. And now we're seeing it break down again. So it seems like, at least over the last 12 years, we obviously want to look at more data than that. You'd expect higher prices from here. Now, there's a few other interesting things. I won't spend too long on this, as of course everyone's here for Bitcoin, but just trying to build the economic picture in the background. So they give you some other insight as opposed to just, here are some degenerate altcoins, and basically when altcoins are done in 12 or 24 months time, then you got nothing to work with. You're basically left out there trying to gamble on sports apps again, like that sort of dumb shit. So anyway, back to this. S&P 500 up to copper gold ratio at a 3-year low, first time in less than a month. Here are all the data points. Let's just cut to the chase on the signals. 27 signals going back to 1978. 12 months from now, basically a 90% hit rate. So 9 out of 10 times you're going to see higher prices on the S&P 500 when this gold copper ratio drops to where it is, which is the exact opposite as to what the financial media would tell us. They're suggesting economic anxiety because copper is dropping, gold is rising. Of course, people talk about, well, if gold's going up, something bad is going down and the economy is going to come down. Yes, but it's not always straight away, and people expect it to be straight away, anxious about poor economics. So there are the points. 9 times out of 10, 12 months later, you're going to see higher prices. For the S&P 500, exactly how much? Well, there's an average of 18%, average max loss of 9.6, call it 10%. So pretty good results. On top of that, if you like to get into different sectors, maybe you're a Tesla fan, Nvidia, whatever it is you like to invest in, sector percentage returns after copper gold ratio at a 3-year low, which is what's happening, you get outweighted returns in the more cyclical stocks. So technology has huge returns here. Industrials also big returns, financials, materials, and you don't get as many, all the returns are a lot lower in the defensive stuff like your staples, utilities, healthcare's up there a little bit, but basically they're your defensive stocks and they're not great performers when this signal goes off. So everyone's sort of getting into that growth stuff, the cyclical stuff, which is similar to getting into Bitcoin and crypto, right? It's technology, it's new stuff, it's going to save the world, all that sort of bullshit that Silicon Valley loves to pump out there. Moving on, all-time high gold prices, Australia, Canada, New Zealand, Norway. This is the worst time to be shorting markets, when they're in new all-time highs. Eventually, the market rolls over, but you can have hundreds of new all-time highs before the market rolls over. So if you want to keep shorting all the way up, go for gold, but the data shows that it is the worst time to be shorting, and there are a lot of people shorting right now. So onto Bitcoin and cryptos. This one has been working to a T. This is Michael's Elliot Wave analysis. He gave this to us in 2022, early 2023, looking at the cycle itself. breaking down the waves upon waves upon waves. Best in the business, if I don't say so myself. Subscribe to his channel, link in the video description for Michael's channel as well. Now, a lot of people don't like Elliot Wave. I understand. And I would not like Elliot Wave either if I hadn't have found Michael's analysis on it, which of course, well, he's going to obviously share that with me, being my brother. But the majority of people have very, very bad Elliot Wave analysis because they don't apply the rules properly or the guidelines. That's a really important part when it comes to any of this type of analysis. It's a little more subjective than other types of analysis, so take it with a grain of salt. But from what I've seen over the last 12, 18 months from Michael, it has been bang on, right? You don't get the exact lows, but you're following patterns and trends into those lows. And I'm not trying to pick exact lows. Maybe you are. I'm definitely not, because I know that doesn't work. The greats have said it, so I'm just going to follow that. I'm not trying to pick exact lows, right? We're trying to get in around the lows. And from what's coming next, if this is the start of a major wave to the upside, maybe we're in the orange line here, which is the wave 3 of 3 in the medium term before we get into this yellow leg up, which could be a wave 5. This is generally the hardest, fastest, biggest, strongest move. And Bitcoin is seeming like it is going to put on a show. There is definitely going to be volatility. There is definitely going to be fake outs. You're probably going to potentially see 70 or 74K hit reversals, or maybe gets to 80 and reverses back down to 74. I don't know. What I'm looking at is the overall trend. And so far this has been bang on, and I'm expecting bigger things to the upside now for BTC. So if you're interested in learning more about that, seeing it on a regular basis, link in the video descriptions for our free weekly report. It's coming out today. So by all means, click on that, subscribe, and then you'll also get notified when we have other reports coming out and also specials on TIA Premium. So that is what's in store for today. Some altcoin stuff there as well. Let's keep going with more of the analysis for BTC and cryptos. So fear and greed's at 72. You know, this has been a pretty good indicator of market sentiment reset, which basically helps in the overall trend, basically resets the stupidity of people and the greed, and also the fear. It resets their fear as things start to go higher. They start to believe more that, oh, prices can go higher. And of course, things come out of the fear. One thing I said in 2023 was this was looking like the least feared bull market, because the last cycle, 2018-19, leading into the peak of 2021, you saw multiple times within that move where the fear and greed reading went under 20. You had it in mid-2019 after that 300% move to the upside of BTC, came under again for COVID, it came under again through the May 2021 dump, and then basically once Bitcoin reached its peak around here, the 69K peak, well, of course, it came back under a couple of times. The final low at 15K was reached at a higher low on market sentiment, which, of course, I was talking about like daily on the channel back in 2020, saying that the sentiment was diverging from the price. Less fear, increasing price, less fear, and the price was still going lower, but not by much, which could potentially mean that we were going to see higher prices. And that was a pretty big one for me there. So anyway, moving on from where we are at that point, we still haven't seen much under 20. So if we do end up into this extreme greed and greed for a longer period of time, which I'll get to in a moment, just in terms of time frames, the volatility in the market sentiment could become wild, like we saw in the last cycle, whereby the stability of people's emotions gets out of control, which is what brings on greed, extreme fear, extreme greed, extreme fear, as opposed to like a nice slow grind up. That's the differences between the market sentiment and the stages of the market, which is why I think unless we're already in it right now, moving into that final stage, that's why I think we're going to see more of this volatility in the market sentiment. So that's basically a look at the fear and greed there. The timing, that's what I was getting at here. So if this is the fear, the greed, we're potentially at the start of a 2 to 4 month greed to extreme greed marathon. So where does that come from? Well, we've gone through and measured it using the fear and greed index here. So that's the TIA fear and greed index. You can get that link in the top of the video description. That's with the Gann swing indicator. Now, just measuring those periods where Bitcoin breaks into this greed and then basically drops back under those levels. You can see it in terms of days. We measured that going back as far as we can, and there was about a 2 to sort of 3-ish month period, sometimes a week or two more. That's why I've said 2 to 4 months, because if that is the case, well, then you're probably going to see higher prices for the next 2 to 4 months, starting from the point of the breakout into the greed section. So where is that? That's about 2 weeks ago. So right around here, 14th, middle of October. So if you counted 2 months from mid-October, that's going to take you to mid-December. If you count 3 months, mid-January, and you count 4 months, then mid-February, right? That's in that extreme greed part where you basically don't see much of a pullback. The pullbacks come and it can be a higher low. I know it might be getting a little bit confusing for some people, but hang in there. Look at this here. You got October 20th. There's the break into greed. So you can see the colors just in the background here. Greed and extreme greed. There it is. And then basically was just tracking around extreme greed for ages and then started to work its way back down and hit it in mid-January. So all this period here, everyone's waiting on pullbacks. And I remember getting calls from people as well. Is this going to pull back? It's at 20K. Is it going to pull back again so I can get in? It was at 24. It only pulled back to 22. And then it rises to 28. Is it going to pull back? Can I get in? It's 35. You get this 1 day of pullback here. Still didn't really do much and kept going. So the moral of the story is, if this is that period, and we won't know until it breaks out and then, it's too late, well, it could be 2 to 4 months. So make sure you are positioned to a degree where you're happy with that position you've got and you're not saying to yourself, is it going to pull back? Because if you're saying that, it's probably unlikely going to pull back. And if you've ever been through an altcoin season, you know just how quickly that happens, and you're just waiting and waiting. Is this going to pull back? Same thing with Bitcoin, especially when it gets into these big cycles. And we could take this back and have a look at each of those occasions where it does move into that extreme greed. As I said, roughly 2 to 4 months. So we'll hang on there and see whether this is the time, whether it just keeps holding here and pushes higher, in which case, well, you probably have to say goodbye to anything under 60K from that point. So down to the granular stuff. Yesterday we said, watch this next. What was that? Well, it was the volume on BTC. The volume has picked up on this move with the breakout above the top of 69,500. We had a close just under 70K, but touched 70,200. And like I brought to you, a month ago, we had the overbalance in time and price, the bullish signal right here around the 26th, 7th, 8th of September. You remember back to those videos, that was the overbalance in time and price. We had the pullback, so great opportunities to buy under here. Higher lows formed, and now the market's pushed away from that. Overbalance in time and price, fantastic trading signals that you can use to identify macro trends that are forming or breaking down, or they are macro trends, whether they're long or short. We teach that in great detail in TIA Premium. So get onto the report, get onto the free email list, and you'll be notified when we have our next sale on that too. This is the stuff that we use for our longer term trading, for Bitcoin, for stock markets. It's been fantastic because it's worked for over 100 years. Gann came up with this absolutely gold tool. So where are they shorting? Well, we've looked at a couple of areas where the market has been shorting for stocks, where they've been shorting in some of the commodities. Now it's time for Bitcoin, the other commodity. And taking a page out of Shapiro's book here, Crowded Market Report, looking at the blues and the reds. The blues are the large speculators. The red is commercials. And this is where we are right now. Look what they've done in the past. We're basically at some extremes yet again, which in the past they were shorting. This is large speculators shorted the entire move up. Look at that, large specs shorted this entire move up. This is BTC price, the breakout there, about 32K, and then it ran, we know, to 74K. Large speculators shorted that move. So if you're underneath this line, that's the shorts. If you're above it, you're longing. The blue is large speculators. The red are commercial traders. Yellow are small speculators. Small speculators like you and I. We're long in this thing all the way through. So we're doing all right here, better than the larger speculators. So the reds got into the longs around here on that sort of break at 35K, and then started to run it up a little harder all the way to the peak, held on, and basically started to flip. This is what they're saying is neutral. Positioning went neutral for about 6 months after the all-time high in March until now, until October. And the comms go max long. They're getting into this max long position. And guess who's shorting? The large speculators again. Are you hearing about other people shorting the market at this level? Maybe they're going a little bit quiet because they tried it before and they got absolutely destroyed. You know who I'm talking about. They're possibly trying it again. And, if this thing breaks out, that sort of is a snowball effect. We're seeing it across Bitcoin. And like I've covered already with stocks and some of these other signals with the stocks declining and others increasing, it's potentially a consolidation signal. So this is a really interesting one. I'll keep watching this. And this is one that I brought to you, for weeks now. We looked at the breakdown. This is a USDT dominance. So when the dominance is breaking down for USDT, it can mean one of two things. Basically, the trend line breakdown generally leads to a Bitcoin or altcoin or both pump. And at the moment, obviously, it's been Bitcoin going up. Some altcoins are, and I'll get to that in just a sec. But in the other case, well, you're pretty much just seeing everything else flatline and Bitcoin going up. So I think this is a really important one to keep watching. We saw it come to test the line. It broke a little. The following week ran up. And guess what? It hit dead on 50%, 5.5%, going and using that swing as it currently stands right now. So it's found resistance again and then pulled back, meaning the dominance is dropping. Where's that money going? Likely, well, we can see it now. It's going into Bitcoin and potentially some of the stronger alts. And it's kind of just a few of those. It's not a lot of alts that are going nuts. Obviously, Solana and a little bit on the SUI as well, which we've been covering, especially when it comes to that correction on SUI. So if this is the true breakdown now, this could be pretty significant for Bitcoin and for cryptocurrencies, provided they're on track to be going up. Otherwise, basically, it's potentially mostly Bitcoin that is going to take the USDT dominance here. So watch out for a breakdown of around 5.1% and then back down to about 5% as well. Then you got a few little support levels here on the way down. ETH, not really, well, kind of taking a little bit of that dominance. It's still got a lot of work to do. We've heard Vitalik come out about the new upgrade for Purge. It seems like he's just doing it at the right time. Bit of marketing there. I know he doesn't care about price, but if you're interested in cycles, interesting how it all comes through now when basically ETH is looking dead. It still needs to get above $2,900, at least in my books, to show some more strength to the upside. Other than that, it's probably going to underperform unless it can do that relatively soon. ETH BTC, it did have another break yesterday, break to the downside, but a higher close. So the time frame we're watching here for an ETH BTC bottom, maybe that is the bottom, who knows, and we get, well, it's a bit much, isn't it? Maybe it rejects there and we get a high low into December. Anyone's guess, but either way, even if that is to occur, it's still just tracking the same gains as Bitcoin or losses as Bitcoin if it just tracks around the same sort of price versus BTC. Moving on to Sol, which is obviously showing more strength than Solana, we had our major signal here, breakout signal, trade signal, get in, essentially is what the signal is saying. And it's come up, tested around that 180, pull back on that big fearful day on Friday and found support yet again on reasonable volume. The market has moved up and we're back at 180, testing that level again. So it hasn't broken through 180, highest close in 90 days. And if it is able to do that, well, just look towards the next resistance levels. Basically every $10 up to the top. You got 190 being these tops, you got 200 psychological level and this top here, and then 210, which is the current bull market cycle top, not the all-time high, but the bull market cycle top, and the 50% level of the entire range. So this is a macro resistance level now. So watch out for 210 should we get that far on Sol. Looking like one of the stronger ones because its Sol BTC chart has also been relatively strong, holding above some key, well, for now, the shorter term 50% levels. It still needs to hold above this particular 50% level as well. And that was almost a whole video without taking a sip of water. If that doesn't deserve a like, I don't know what does, but here we are. SUI, average drawdowns, as we've been covering here on the channel, a bit of an entry plan, if you will, using money management. No one talks about money management and how to get in. Here's a pyramid, or basically a triangle. Put the most in at the lows, put the least in at the tops, and you'll find yourself, well, provided the market goes up, you'll find yourself making gains, or at least paper gains until you take the damn profits. What a lot of people do, almost everyone that starts out does this. They put a little bit in first and then a little more when it's going in their direction. And then they put more because it's working out. And then they put heaps more towards the peak. And what happens? You get an upside down pyramid. So don't get it in the habit of upside down pyramiding, because you got the most money in the top, which means your gains are smaller now. You basically averaged up instead of averaged down. And so when this market rolls over, it doesn't have to roll over very much, and you've lost all these gains, basically wiped out that gain, and you could be in a loss. If not, best case scenario would be a break even. So you want to go in a normal pyramid. Biggest at the bottom, lowest at the top. We're at 32% down from the high, and the previous corrections that Sui's done are in the vicinity of 30 to 35%. We got there. It could go further, of course. No one knows for sure, but if you've got the probabilities and you're stacking those on your side, you've got a money management plan basically on how you're putting money into the markets, then hopefully you're going to be on the right side of the trade in the longer term. That's all I got for you today. Like, subscribe, heaps going on in the markets. Don't leave it now. It seems pretty interesting, especially with Bitcoin getting to 70K. And I'll see you guys back here at the next video. Oh, and the free weekly report is out today. So if you are subscribed to the email list, look out for that coming through to your inbox today. Thanks, guys. See you at the next one.